Today, we're diving into a company that is quite literally all around you, even if you've never actually heard its name. We're talking about Intertek. They're sort of the hidden force making sure that countless products we all use every single day are safe and up to scratch. So we're going to break down their 2025 performance and see what's really going on inside this global giant. So I want to start with a question for you. Just think for a second about the things you use every day. The coffee you had this morning, the car you commute in, maybe even your kid's favorite toy. What's the invisible thread that connects all of them? Well, that invisible thread, it's all about trust. A trust that's built on this massive global system of testing, inspection, and certification. And that system is the reason you can feel confident that the things you buy are safe, that they're reliable. It basically provides peace of mind on a global scale. And right at the heart of this system is Intertek. They're a major player in what's known as the ATIC industry. That stands for Assurance, Testing, Inspection, and Certification. Honestly, the best way to think of them is as the invisible backbone of global trade. And today, we're putting that backbone right under the microscope. All right, so let's get into it, starting with the big picture. How did Intertek actually do in 2025? Well, if you only look at the headline numbers, the story they're telling looks incredibly strong. First up, total revenue. We're talking over $4.5 billion US. That is a massive number, and it just gives you a sense of the sheer scale of their operations, which, by the way, span over 100 countries. Okay, but revenue is just one piece of the puzzle, right? Next, you have their adjusted operating margin, which came in at a very, very healthy 18.1%. For any analyst watching, you know this is a key signal of profitability. It tells you they're not just big, they're actually really good at turning all that revenue into profit. And this last number, this is a big one. A cash conversion rate of over 110%. What this means is they are exceptionally good at turning those operating profits into actual real cash in the bank, which, as we all know, is the lifeblood of any business. So yeah, on the surface, it's a picture of really robust health. But you know how it is. Those shiny headline figures always invite a closer look. So the real question for any investor is, what's happening beneath the surface? Let's dig into the analyst's audit to get a more nuanced picture. A deep dive report from HDIN Research summed up Intertek's 2025 performance with this Chinese phrase, "Wai shi nei su." It basically translates to strong on the outside, but hollow on the inside. I mean, that is a provocative claim. So what's the evidence for it? And here's where we start to see the first crack. Just take a look at this table. The company's overall profit margin is being held up by one star performer, the Consumer Products division, which has an absolutely incredible 30.4% margin. But then you look at the other end of the spectrum. The World of Energy division is lagging way behind at just 8.7%. That is a huge disparity, and it points to a major structural weakness. The next thing the analysis flags is how they calculate that adjusted profit margin. It turns out there's about $102 million in what are called separately disclosed items. Now, these are real costs. We're talking factory closures, severance packages, but they're excluded from that main profit figure. Look, this is a common accounting practice, but it's important to note that it makes the headline number look a little rosier than the unadjusted bottom line profit. And finally, let's take a quick look at the balance sheet. It's carrying nearly $1.9 billion in something called goodwill. Basically, that's the premium they paid for companies they acquired in the past. Now, this can be a risk, because if those acquired businesses start to underperform, that goodwill has to get written down, and that can really hurt profits. And it seems auditors have already flagged 4 specific units for this exact risk. So, you've got this mixed bag, right? Stellar performance on the one hand, but some real questions about internal weaknesses on the other. So, what's Intertek's strategy to move forward? Well, the answer seems to lie in some very precise acquisitions. In 2025, Intertek made 4 key bolt-on acquisitions, and if you look at them together, a very clear strategic direction starts to emerge. They're not just out there buying revenue, they're buying into very specific high-growth sectors. You see the focus areas here? Sustainability, health and safety. This shows a deliberate pivot towards what they believe are the future growth drivers of the entire industry. And here is the crucial point. Get this. These new businesses they bought operate at a combined margin of 34%. That is nearly double the group's average. This shows a very deliberate strategy. They don't just want to grow, they want to acquire higher quality, more profitable revenue streams. Now, acquisitions are only half the story. The second pillar of their future-proofing strategy is a really big push into technology. They're trying to fundamentally transform what it even means to provide quality assurance in our very digital world. A great example of this is supply tech. You know how chaotic and disrupted global supply chains are right now. Well, companies are desperate to make their operations more resilient, and supply tech is designed to do exactly that. It uses data and intelligence to help businesses navigate all that complexity and find trusted suppliers fast. And what's even more forward-looking is their AI² initiative. Think about it. As artificial intelligence gets embedded into pretty much everything, how do you make sure it's reliable, that it's unbiased, that it's compliant? Intertek is stepping in to answer that very question, creating what it calls the world's first end-to-end assurance program for AI. It's a fascinating shift from testing physical products to assuring the quality of digital systems. So, when you put it all together, the financial realities, the smart acquisitions, and this major technological pivot, what does the path forward actually look like for Intertek in what is, let's face it, an increasingly complex world? This right here really is the central question. On one hand, you've got these internal challenges, relying too much on one Start division, some accounting that flatters the bottom line. But on the other hand, you've got a very clear, aggressive strategy to lean into the future with these high-margin acquisitions and cutting-edge tech. The next few years are really going to show us whether this forward-looking strategy is enough to overcome the structural risks that are hidden inside their otherwise impressive performance. This analysis is brought to you by HDIN Research. Visit www.hdinresearch.com for the full report.